What's up traders, Cam Hawkins here from Trading Nut. Welcome to something very new here on the channel. We've got the first ever episode of our Smart Money Concepts series, brought to you by Nathan Jester from Ariel Fx Trading. So these guys are going to give you a complete masterclass on smart money concept trading over the next few weeks. And it's not just that. I've also got them on to do some live trading sessions with you as well. So these will be live streamed on the Trading Nut channel. So please make sure you hit subscribe, click on that notifications bell, and click on the little all button there to get notified when these live streams go live. And look, if you want to find out more from Nathan and the team at Ariel Fx, then check them out. I'll put a link up here in the cards and also a link down there at the bottom of the video. So folks, without further ado, let's get on with episode 1.
Hello fellow traders, welcome to this video. I hope you guys are doing well and are having a great trading week thus far. I'm so excited to be teaching you all about smart money concepts, a strategy that has taken me from a broke college student hardly getting by to a multiple six-figure per year funded trader in just under 12 months learning the strategy. So guys, buckle up for an amazing ride. I'm so excited to get going. Big shout out to Cam for making this all possible. Trading Nut is an amazing platform to learn about all different types of trading strategies, and I'm so excited to be teaching you guys smart money concepts today. Now, smart money concepts has been around forever. Ever since trading has started, there has always been price manipulation by higher level institutions and banks directing price in the way that they want to take it, because they control the liquidity, they control where price goes. And now us as retail traders can look at specific clues within the market to determine exactly where price is going and to get precise entries for high risk to reward trades. So guys, I'm going to start off with CAD Swiss franc. I'm going to be going over 3 to 4 pairs. These pairs are all hindsight trades, but all of them have been sent to our VIP community, and I will show you where exactly we have done that through this Google Drive here with all the parameters. All right, so these specific trades I have selected show smart money concepts very well. Now, on a day-to-day basis, we are sending our trades to our VIP community, but these ones highlight smart money concepts in a way that anyone at any level of experience would be able to understand and grasp the concepts. All right, so I'm going to first start off by talking about smart money on a broader level and then going into the specifics. All right, so let's start off with CAD Swiss franc. It's so important to identify structure. Apart from smart money trading, or the smart money concepts that I will be divulging into, structure is our number one key point in helping people first become profitable traders. Many people do not understand structure properly, and regardless of how good their strategy is, still fail because they're trading in the wrong direction. So how many professional traders usually start? They start off on the higher time frames and work their way down. I'm going to start off simply on the daily time frame. Now, understanding that before this expansionary move to the upside, accumulation had to occur. Now, accumulation is another topic that I will be discussing at a later point, but for the sake of time, I'm only going to be talking about structure and how it relates to smart money. So after accumulation, we have this expansionary move. Before another expansionary move can take place, normally you have a pullback back down into your accumulation phase or distribution phase, whichever direction of trend you are currently trading, that fills in balance. So we can see here our pullback phase has occurred. We are in a lower time frame downtrend, higher time frame uptrend. So until price can get down into sort of these regions of price, these discounted regions, because no one likes to buy at a premium. We only like to buy at discount, just like buying shoes. If shoes are worth $200, would you rather buy them for $175 or $250? Well, you never want to buy them at a premium. You always want to get the best deal, bang for your buck, right? So we want to be buying at discounted regions of price, wanting to be buying down here. Okay, so we want retracements to occur before these discounted regions of price occur, so we can just simply pull our fib from the low to the high and say, okay, anything below the 50% is discount, anything above is premium. All right, so lower time frame, we are in a downtrend. Okay, it is key to understand our structure points. I'm just going to go through these really quickly. All right, right in here. We have our lower low, our lower high as well, lower low, lower high, lower low. We're looking for a lower high for another lower low. Oftentimes what the market will do is we'll have one drive, two drive, three drive cycle into the low. Okay. Now we did not know that this was going to occur, this big bullish run, because this is where the trade occurred. So we could assume at that point in time we would be trading short. Okay. Now getting rid of all of these markups, our nearest supply level. Now supply and demand come into play with smart money concepts. Supply and demand are areas where price is oftentimes attracted to and has the most sensitivity around these levels. All right, so we can see before this massive run to the downside, our last buy to sell move occurred. So anywhere in here is probably where we're going to be looking to short the market, and that's exactly where we came into. Now I know our trades occurred here, our trades did not occur here, but we can see that we filled that imbalance. Imbalance simply means price has not offered in a downtrend here, in this sell-off, has not offered any buying within this selling volume here. Same goes for, when we're pushing up very, very strongly. Between this wick and this wick, there has been no selling offered within this region of price. Oftentimes, imbalance gets filled. All right, so that's exactly what happened. We filled imbalance, and we're continuing to fall with the overall trend on the short term, right? So we can assume that since we have already filled imbalance here and come up into this supply level, we are probably not going to take out this high, especially since we're down here looking at price, and I'll be getting into that shortly. So going into the lower time frames, I'm just going to get rid of these markups. We'll go down to the 1 hour time frame. All right. So since we have already identified that price has hit that imbalance, so this was the region of price that hit the imbalance way over here, we are still maintaining bearish structure. So we want to be looking for sells. Okay. So highlighting this level of price in here, we have made a high, and then we have broken counter trend structure. Counter trend meaning simply right here. The lower low, or the prior higher low, has been run, creating a lower low. We should expect a pullback for a continuation short. Okay, so this was a level of supply that we came up into, and then we created our last buy to sell move. Inefficient pricing, we wanted to pull back up into this level to then mitigate orders. Mitigation in smart money concepts terms simply means to make less severe. Once big banks and institutions recognize liquidity, they oftentimes take that liquidity very quickly. Where's liquidity? Right here. All these highs in here. Yeah, that's why it runs it very quickly and then sells off very quickly. Retail trader stop loss is placed right above that level. Okay, so we have to the big banks and institutions have to mitigate these orders. They have to get out of them because they introduced buying volume, so they bought price to take the retail trader stop losses, and now they moved in the opposite direction. They have to get out of their buys. They have to break even on their buys, which is why price comes back up, mitigates them. They get out of their buys, and then they can continue with the overall direction of trend. All right. So now I'm going to scale into the 15-minute time frame here, and we're going to take a look at what happened. All right, the 15-minute time frame provided a phenomenal entry for us. Now, price is fractal, meaning everything happens on every single time frame. There is no key time frame to look at. When people ask me, hey, what time frame is best for trading? All of them. All of them play important roles in each other. You have to put them in conjunction with one another to provide the best setup and find the best setup for yourself. So once price has mitigated orders here, we have pushed down very strongly. Another key thing to talk about is violent moves that occur once price comes into these supply regions to mitigate orders. Violent move to the upside to finally mitigate them, and violent move back to the downside to move in the overall direction of trend. They get in, they get out very quickly. All right. So this is our last buying volume here. The last buying volume before the overall selling volume. We have to mitigate these orders in here because since we're continuing with overall trend, this is our last swing point. This is our supply level. there is imbalance in here. Price hasn't offered any buys right in here. So we oftentimes come and fill that. And then we have to mitigate these last buy to sell orders. So we scale all the way over here. This is exactly where we took this trade. From the open of the last buy to sell move is where we place our sell limit. Stops go above the high. Okay. So that's exactly what we had here. Price, we had a little bit of drawdown, but still 1 to 12.35 risk to reward on this trade. A little bit of drawdown, but then we overall moved in the overall direction of trend because we mitigated these orders and we got out and we continued with the trend. Okay, so if we scroll over to the right or to the left here, CAD Swiss franc follows supply and demand very well. What do I mean by that? Well, it looks really pretty. There's an area of supply in here. There's an area of supply in here. There's an area of supply right in here with this imbalance. And we can keep going. Our last buy to sell volume here has been mitigated. Look at that. Look at those mitigations. Look at the following of structure. Look at the high risk to reward opportunities you could be taking from understanding this. So first, it's structure. 2, it's identifying key supply demand levels or sponsored candle moves, last buy to sells or sell to buys that big banks need to get out of their positions in order to continue with the overall direction of trend. So overall direction is bearish. Okay, we come up into these sort of levels and then create new supply levels because of it. Look, we had a fast buy, a fast sell, taking liquidity, mitigating orders. This creates the new supply level. That's exactly how we came right back up into that level. Okay, so we scroll all the way over here and we get in from 0.72938. This is our level. So on the 15-minute time frame, going back here, we can clearly see the last buy to sell move in the market, and that was mitigated very nicely before the overall move occurred. Okay, providing us with a nice 1 to 12.35 risk to reward, and I believe that was right. Actually, what is that? 16.5 pip stop. That was right here. So this was a trade that we sent to our members. These are the exact parameters that we use. We provide you with everything: the pair, the limit order, the entry, the stop loss, and all the take profits with the risk to rewards. This is the before picture that we had. In our after picture, you can clearly see it right here. Very nice. We had another opportunity. Again, oftentimes when we mitigate orders, we create other supply zones to react off of later. On the 1 hour time frame, this provided a beautiful setup. Our last buy to sell, we had an imbalance in here as well. Our last supply zone, we can mark that off. Take price all the way over here. So when price makes a lower low, I often wait for lower lows to be made because that's structure. Lower low, we're expecting a lower high now. Okay. What I love to see before price comes back to mitigate a level are equal lows or equal highs, aka liquidity. So when we are trending down, I love to see equal lows form so that when we pull back up into our levels, this creates the draw on liquidity to be taken at a later time. Meaning, when we mitigate these levels, we have a very high probability of knowing exactly where price is going based upon liquidity that we can understand. These equal lows, we have liquidity resting below it. We should come back down and take that liquidity before moving. If we are going to go long, before moving long, we should take this liquidity first. So right in here, we had a very nice reaction. Again, we knew exactly where price was going. We knew exactly where it was going to reverse from. This happened on a Friday. Oftentimes what you will see is price moving towards levels of supply and demand, moving towards their mitigation targets before the market closes on a Friday. And that's exactly what happened. We mitigated, Friday closure occurred, Sunday open, we left a gap. Yes, gaps are filled, but they don't have to be filled immediately. We had a nice sell-off. We actually hit our take profit 2, which was at 7,200 psychological level, so we can see that hit literally to the T. We ended up pushing right back to the upside, so this did hit us break even because we go break even after TP1. So our TP1 was right in here, our TP2 is down here, and we also hit TP2 down in here too, and I think that was 7,200 as well. So this one did hit out break even, and so did this one. But again, we made a really good profit on these two trades because we secured partials at high areas, high probability reversal area. So even though we were in a downtrend, understanding where price could reverse are good targets for your different take profits. So we did push back to the upside, and unfortunately, we never took this liquidity. I do think this will be taken at some point in the future. We did end up making a higher high in the market, but nonetheless, this is still liquidity to be taken probably at a later time when price moves back to the downside again. So those were two CAD Swiss franc trades that we took with our VIP members. The second one right here, this entry, I believe was right here. Yep. These were all the parameters that went along with it. This was our markup, and usually we provide video breakdowns as well to teach you guys exactly what we're looking at so you can see it from the video, because a lot of people are visual learners, as am I. So we like to create those for you guys as well. And here is the after with it. We had a big gap. We sold it from that level. All right, the next one I want to go over with you guys is CAD JPY. CAD JPY, I love trading the CAD pairs. They follow supply and demand very well and smart money concepts extremely well. So let me just scale out. Let me find this. This occurred back in 2021 in September. Again, I'm just going over the ones that have great smart money confluences just to be able to teach you guys the proper way, and so you can easily identify these and understand the concepts very easily, even if you are a beginner smart money trader. So again, Canadian dollar, Japanese yen, we have to understand structure. Now, I'm not going to bore you with all the structure. We teach these in our other YouTube videos, and we do have courses that teach you on that as well. But I guess just starting from the 4-hour time frame, clearly we're in a short-term bearish downtrend. Overall, we are in an uptrend, but currently we can see that we are making lower lows, lower highs. Okay, we had our lower low, we had our lower high coming up, filling in balance, our last buy to sell move. See, guys, this happens on every single time frame. What happened here? Buy to sell. Imbalance was left, liquidity was taken, supply was hit. Look at that, beautiful. Pull back up into this level, and then we break counter trend structure. Counter trend was broken. We closed below the previous higher low, creating that lower low, and then we can consider ourselves lower time frame bearish again, looking to take out this low here. All right, so get rid of these markups here. Now let's scale in. So now that we have identified the higher time frame trend, let's go into the lower time frames and find a setup. And now it is important that even if we have found our direction of trend, we still don't want to force anything. We don't want to force setups just because we think we know where it's going. We always want to wait for the market to come to us. Okay? They will provide opportunities. It's our job to be patient. So now that we have broken counter trend structure here, I'm going to put this back up. All right, we have made a lower low in the market. We have pulled back up. This was an area of supply. I did not take a trade from here. Why? Because, well, even though this is an area of supply, so is this. So is this. Obviously, we knew we weren't going to come back up and breach this high because we have created a lower low. But I wanted to see reactions from these levels first. Okay, and we got the reaction from this supply zone. Then we had a massive run to the downside. We can see with this last buy to sell, we took liquidity and we filled in balance coming into that supply, and then we made a lower low in the market, closing below our prior low. Now that is confirmed. We now can play off of this level, okay? And our level, well, we didn't place this trade. I don't think I saw this in time. We actually placed this one here. But this could have been another trade that you could have taken. Buy to sell, imbalance fill, equal highs on a lower time frame. I know I'm on the 1 hour, but I'm sure if you scale into the 5 minute, these are clear equal highs, aka liquidity. Again, fast move to the upside, take liquidity, mitigate, fast violent move back to the downside, get in, get out. That's what they do. Okay, we have made our overall lower low compared to this low here, and now we're waiting for the retracement to get back in on this level. So what are the confluences for this trade here that we took at 86.94? Well, one, we have imbalance. No buying was offered in here. It was straight selling volume, very quick. We oftentimes pull back up, fill that imbalance. What I always say, what's fast never lasts. What's fast never lasts. Pulls back up, mitigates that, right? Our last buy to sell volume. Buy to sell liquidity has been taken. What does this mean? Liquidity, retail trader stop losses, and influx in buy orders to not only mitigate this, but to take liquidity, pushing back to the downside. They got to get out of their buys. Okay, they get out of their buys, they break even on their buys, now they can continue with the trend. All right. So we got in at 86.94, stops right above the high. 30 pip stop loss. This was a 1 to 5. Still, 1 to 5s are very good. Okay, that means you can lose the majority of your trades but still remain profitable overall. That's why I love smart money concepts, is because they provide such high risk to reward opportunities. Just like the other CAD Chef trade, it provided a 1 to 12. Obviously, it didn't hit that, but it easily could have, and it provided us with that opportunity. So retail, if you trade retail, which I don't recommend, it's all bullcrap. They provide, 1 to 1s, 1 to 2s, maybe 1 to 3s at most. Really not understanding where you should put your stop loss most of the time. Smart money, you can easily identify your entries, and not only that, easily identify your stop losses. Stop loss above the sponsored candle move. All right, 1 to 5 risk to reward. I could lose 4 trades in a row, win the 5th one, and still be profitable. That's why I love smart money. So we took this all the way down to 85.417. The reason for that is because this is an area of demand. I'm not going to really get too much into this. This is an area of demand that we potentially could see a reversal from. Even though we are in an overall bearish downtrend, we could easily see a reversal from these demand levels, from these discounted regions of price. And I thought 1 to 5, this was a very good risk to reward. Let's get in and get out of the trade. And that's exactly what happened. And guess what? We didn't even break the structure here. We actually reversed right back to the upside, but we were already out anyways. Don't be too greedy when you trade. Make your money, get out, look for the next opportunity. So guys, I hope you're starting to develop a little bit of an understanding as to how we start to look at smart money concepts and incorporate that into our analysis every single day. Now I'm going to be going over 2 more trades. One was Euro JPY. And let me just scale out here and find where that was. It's right here. Perfect. Okay, so structure. All right, perfect. We got to go over structure. Structure, even though we are in an overall uptrend, the short-term downtrend is still valid, right? Lower low, lower high. We actually did make a lower low here compared to this low here. Now we're looking for our lower high. Now, what I have sold right in here, even though this is supply, not going to get into it, but that's supply. We stopped here and we shorted off. What I have sold in here, probably not, because there is nothing to tell me that we were not going to go long. Or there was nothing telling me that we were going to go short, because we're still making higher highs, higher lows. But right when we see that lower high form and then that lower low form, we can consider this short-term bearish, because we have 1 push, 2 push. That 3rd push to the downside is our most probable before potentially moving back in the overall direction of trend. So supply was hit, liquidity was taken. I did not sell the market here. I wanted to see the reaction from it. We had this 4-hour supply zone. Okay, price started to stall, creating that doji candle formation, and then we fell to the downside. Indecision creates that supply zone. We had a reaction from the supply, a very strong reaction, as a matter of fact, and we moved away from it very quickly, simply just looking for that pullback for the continuation. So if you're unsure on whether these supply and demand zones, in this case supply, will be respected, wait for the reaction first, and then you can get in off the retracement to still provide you with a good opportunity. Now, what if price came down and filled this imbalance here before pulling back? Would I have got in? Probably not. The reason for that is short term, higher high, higher low, higher high. If price came down here, created that higher low where we originally accumulated, this accumulation actually came into an area of a sell to buy that took liquidity, but the imbalance started right here, this fast move, selling volume was not offered. I wouldn't have taken this trade, because we could have easily probably made a higher high. because this is our, what I like to call an LPOR, our last point of return. If we break, then we know we're going short, but this is a high area of sensitivity that could be a reversal, right? But we didn't come into that yet. So when we started to pull back, I thought, okay, we should be looking for selling opportunities, because not only did we react off of a supply level very strongly, we had another supply level that we could react from, also imbalanced, and we also had room to the downside to take this coming into this level before potentially reversing back to the upside. Obviously, it didn't. It continued short because that's what we're in. We're in an overall downtrend here. Lower low, lower high, lower low, lower high, lower low. Third drive. That's why we saw the reversal. All right. So now scaling into, I think it's a 15-minute. Alrighty. So now that we have seen the reaction from the higher time frame supply level, this is our newfound supply, because I'm just going to mark it off. Because this is our last buying volume before the major sell-off that occurred here. I think this had something to do with like ECB press conference or something like that, some big news event. News events, do not be scared of news, guys. News is just a catalyst to move price in the overall direction it was always going to go anyways. It is not meant to be uncertainty or whatever you want to call it. If price is going to go short, news is going to be the catalyst to push it short. Just the excuse to move it in the overall direction it was always meant to go. So last buying volume before the sell-off, we had our orders at 131.84. Actually, I think it was a little bit lower. I'm not sure why I had that marked up. I think it was a little bit lower, around like 131.7, just to fill imbalance. But the price did come and fill and completely fill the imbalance here, mitigated these last buy to sell. This mitigation buy to sell sponsored move, creating that lower low, lower high sequence for that overall lower low. We had barely any drawdown. This was a 1 to, I think, just shy of a 1 to 5, 1 to 4.3 something. I can't really see it. But nonetheless, got in at 131.84, mitigated those orders, fell right back to the downside. Now, let's say you were uncertain of whether it was going to stop right here. We placed this sell limit. It met all of our rules. But let's just say that maybe you're not as experienced and you don't really know. You want to wait for the reactions to be safe. No problem. That's fine. What you can do, wait for the reaction, wait for the counter trend to break. This isn't really structure. I wouldn't say this is a higher high, higher low, because we never pulled back into discount before making a higher high here. Usually what I like to see for a valid pullback is at least discounted pricing before a higher high is made. But look at that. Nonetheless, if you pull it from the low to the high, any sort of pullback, the negative 27 lines up with our entry level. Very good influence as well. But we had a strong reaction from it. What you could have easily done, taken it off of the last point of supply, which is right here, and then we could have placed our stop loss right above the high here, and then taken it all the way down to our overall take profit level, which is right there, for a nice 1 to 4.5, we'll say 1 to 4.5. So 4.5% if you risk 1%. So that is another trick that I like to teach my students about. If you're a little unsure of whether these supply or mitigation or sponsor candle moves will be met and fulfilled, wait for the reactions and then look for opportunities to get back in off retracements. But we got in, had very little drawdown, and took this all the way down. I'm going to scale back out to the 1 hour. Took this all the way down to 129.8. The reason for that is the imbalance move was right here. There are two imbalance moves. One, right here, between this wick and this wick. This was the fill, but then we go to the higher time frame, and the imbalance move was actually here as well. So which one do you want to target? Well, you could have easily targeted this one. That was probably, very viable, which it actually did hit. But I wanted to target the 1 hour imbalance only because it was a psychological level, 129.8. These whole round numbers produce sensitivity. So we got in, got out 4.34%, and we moved on. Our last trade that I'm going to be going over with you is Euro USD. So Euro USD, I'm just going to get rid of some of this. I don't know why I have this marked up. Euro USD was a counter trend play. I don't like to trade counter trend too much. However, we had room to go to the downside to come into our overall sponsored move before potentially reversing, which is exactly what we did. So let's first start by talking about what we're seeing within here. What kind of smart money did we see? So scaling in, I don't believe, let's see, I don't know if I can go all the way down, 3 minute. Okay, this current trend, we're in a downtrend on the lower time frame. I wanted to come into this level, so that's why I took the counter trend opportunity. We can see all the liquidity that had been built up in here, which was taken buy to sell move. The structure was broken, lower low was formed. We're looking for the retracement. And we did come up into our last point of supply here. I didn't take this trade. I didn't take this short because this wasn't very clear to me. But after the fact, after we made that lower low and the liquidity run, now through hindsight, it's easy to see that this was the supply. But now we can take it off of our last point of supply after the structure had been broken. So liquidity was run, buy to sell, lower low was formed, and our last point of supply was right in here. I think I took it up to 50% of it. You can do that too, 50% of it or the open. You could have easily taken it off of the open of this candle here, but I took it off to 50% because it was also on the 1 hour time frame. It also was the imbalance fill right here. Imbalance fill with this last buy to sell, 1, 2, 3 pin pattern engulfing candle formation. All right, so going back to the 3 minute. You can see that we had a very nice reaction from it. Okay, this was not a good risk to reward, only a 1 to 2.72. This intraday get in and out, but still nonetheless made 2.72%. And if we scale in even further, again, this happens all the time. You don't know that we're going to react from this level. Wait for the counter trend break. That's exactly what we had. Counter trend broke. And it's not simply just a trend line. I only use trend lines to show you the trend here. So higher high, higher low, higher high, higher low, higher high, higher low, failed to make that higher high, lower low. You could have easily taken it off of this last buy to sell right in here. You can see. So I'm just going to clone this to show you. Could have taken it right off the open. Stops above the high here, 9 pip stop. And even if you just took it down to where we had our take profit at 1.1, that still would have been a nice 1 to 4.8, almost a 1 to 5 on that trade. So there's always other opportunities to be getting into the market here, even if you don't make the overall mitigation move. So if you miss this or don't want to place it, look for the counter trend break, pull back into the nearest supply zone, stops above the overall swing high, and you can take it in the overall direction of trend. Make sure that you're trading with the current market volume I wouldn't say forecast, I would more say the momentum for the day. So if the momentum for the day is overall bearish, meaning if you're looking at other XXX USD pairs, and you say the dollar index is pushing up, NZD USD is pushing down, GBP USD is pushing down, Euro USD is probably going to be pushing down, following suit with all the other pairs. That means dollar is probably very strong for the day, and we're already in a lower time frame downtrend. We have an area of price down here that we want to come into to mitigate before potentially going long. We have room to go to the downside. We took liquidity coming into a supply level. We broke counter trend structure coming up into 1 hour inefficiency or imbalance, whatever you like to call it. Also 3 minute, 5 minute, probably 10 minute, supply zone. Coming up into that, got our entry. If you didn't like it, you could have taken it off of the counter trend break of structure. Lower low was formed, pull back into that zone. Perfect sell off there. Could have had 2 entries. But that right there, I forgot to go over it. Euro USD, this was our before. And then this was the signal that was sent out. And then obviously the after played out very well. Going back to Euro GBP that we had, Euro JPY, this was the before. Not the best risk to reward, but we have these parameters here, pulled back into our level. and then obviously we had the sell-off from there. So guys, I hope you guys have learned a lot. Hope you guys have taken some value from this. Smart money is really just, it's an easy strategy to comprehend and see real time on the charts, but it is actually a real way of identifying key levels based upon what the market makers are doing and how they're leaving clues. Retail is all based upon, I don't know, fibs, Bollinger Bands, trend lines, but what's the actual logistics behind those trend lines? Well, the logistics is liquidity, but the retail traders are trading with the trend line, but what's resting below the trend line or above the trend line? Liquidity. So most likely, the big banks and institutions are going to be taking that liquidity. That's why retail just doesn't work in the long run. There will be times where trend lines do play out. It's probably just because it lined up with a smart money concept-based move. So that's why I say not all the time does it play out. So guys, I hope you guys have taken a lot of value from this. If you have any questions about anything that I went over, feel free to shoot me a DM or just comment below this video. You can message me on Telegram at Ariel Fx Trading. I will also provide our free Discord link in the description below. If you guys want to check us out, we do provide some free value there, some setups here and there, and just some analysis to get you guys going with this and get you guys familiarized with our way, our strategy, and the way we look at charts each and every day. So thank you guys for tuning in. Have a great rest of your day, and happy trading to you all.
All right, folks, so there you have it. That is the first in our Smart Money Concept Trading series. Hope you liked it. Hope you loved it. And in fact, there's more coming. So do remember, we've got the live stream with the guys coming up. Hopefully, first one's going to be next week. These guys are going to be giving you live market analysis, possibly some trades in there, who knows. And it's all going to be live here on the Trading Nut channel. So do remember, hit subscribe, hit like, and click on that notifications bell and click all to make sure you don't miss out on that live stream. Also, we're trying to live stream it to Facebook and Twitter as well. So if you do want to try and catch it on those channels, it'll be there as well. Now, folks, last but not least, if you do want to find out more from Nathan and the team at Ariel FX, then links up there in the card or links in below the video. So hope you enjoyed that, and we'll see you in the next one.